Good morning, everybody. Thank you for joining us. It's my apologies for the late start. We have a full house here at ECDPM and very talkative, so it's great to see people engaging so actively. My apologies for those that have been waiting online. Welcome at ECDPM. My name is San Bilal, and I've been working with Karim Karaki, who has been delayed by the train. He's based in Luxembourg. He will be coming, and as we're talking about him, is entering the room. Karim Karaki, who is leading our work on development finance. And so he is joining me also today, and we're very pleased to have a very prestigious panel, and I will introduce the panel afterwards. But I just would like to perhaps explain why we are here today, and also why we thought about convening this discussion and doing some background study. We have written a paper. Good morning, Karim. So you manage your entrance into the room very well, the key man. So why do we talk about, I mean, because this is also questions that several people, since we the paper was released just before Christmas, and people were asking us, why do you talk about leveraging MDBs to advance the geostrategic, geoeconomic interests of the EU? For development, that seems to be quite logical, but why? And the second question I got quite often is, why do you talk about Global Gateway 2.0? We thought we have only one global gateway, and so what does it mean? So let me perhaps just explain the global gateway what we call global gateway 1.0 and global gateway 2.0. Where do we come from? It's basically the evolution that we have seen in the way global gateway has been thought and is being implemented. Really, global gateway started from development finance initially, in trying to say, how can we mobilize more investment for development and in a way that is slightly more geostrategic? And the way to be more geostrategic was in particular focusing not on all the topics, but saying we want to have five main areas: connectivity, on infrastructure and transport and energy and digital, plus the fourth one, health, and the fifth one is education and research and innovation. So these were the kind of the five topics, and saying, well, can we be a bit more strategic in focusing on in these areas, bringing the EU added value and principles and security dimensions. And so there was really this feeling that the global gateway is really about fostering a development agenda. With the Commission, with the, I would say, especially, well, perhaps with the introduction of critical raw materials, the energy crisis, which puts, with the war of Russia and Ukraine, the energy crisis and pressures that were put on Europe puts energy perhaps higher at the strategic dimension. And then the notion of critical raw materials was added in the global gateway, so it became a bit more even more geostrategic in this aspect. But with the second commission of von der Leyen, then there was a clear element of putting security at the forefront of what the EU is doing, competitiveness is the forefront, the notion of strategic autonomy, the notion of engaging what are the interests also of the EU becomes really at the core also of what the EU is doing domestically and in the world. And in that sense, we've seen that also translated into a global gateway, with the question of how do we engage more our own European private sector in global gateway. And that was translated into the notion of trying to have mutually beneficial type of engagement partnership with, of course, still it has to be beneficial for the partner country, but it has to be also beneficial for the EU. And many of you might be familiar with the work that we're doing at ECDPM for the European Commission on how to better involve the export credit agencies. I've been doing this work with Professor Andreas Classen and Laure Blanchard-Brunac. we have been working on what would be the modalities. Has the EU the kind of right tools and the right process to engage export credit agencies that can support directly the European private sector? And more broadly, we have been working with Karim on what's in it for the European private sector in the global gateway, how to get engaged and how to benefit. And the approach also of the EU has been much more trying to work out not just on the Team Europe principle, but also on the Team National, so that the European private sector could engage through a Team National and with the different actors, a whole of government approach at the national level to try to engage in the global gateway. And that was also translated in this global gateway investment hub that has been put in place. So this is this shift from a purely or from a mainly development type of perspective, development finance, to the question of mutually beneficial and the EU interest becoming more at the forefront also of the engagement of Global Gateway, that we talk about Global Gateway 1.0 to Global Gateway 2.0. So, of course, it's a transformation, so it's a process. It's not clear-cut elements, but this is this dimension. And in these concerns, in this process, then our question was, okay, but what is the role of really development actors more generally? And so we thought in particular about the notions of MDBs. So there's, of course, a general discussion about the values of MDBs and their contribution to development and how they could increase their firepower and how they could improve their process. So there's a whole discussion on development. And we thought if we want to talk about MDBs in this Global Gateway 2.0, of course, we could think about how they could be even more efficient in terms of development. But many people are doing that. But we were thinking, well, even if you think in terms of what is in the EU interest and how the EU is trying to push its own interest, why MDBs? And I would say, I mean, we decided to focus on MDBs because that was more tangible, but we could have thought more broadly about development finance institutions and public development banks, including national public development banks. And also other development actors, you know, technical agencies, be it either at the UN or at the national level. How these actors that are really focused on development and not initially on promoting European interests can contribute to what the EU is trying to do. And that was the notion of the background of why we're trying to engage. And based on that, I'll leave to Karim to explain what we come up with in terms of engaging with the leveraging MDBs.
Thank you very much, San. And sorry for being late at my own event then, but good morning to you all. So San explained some of the reasons why we looked at how the EU could better leverage MDBs in a more strategic manner in order to achieve their own EU geostrategic objectives. And I think that maybe to complement this, I mean, at ECDPM, we've been involved in many European policy processes. We looked at the MFF, next EU budget. We look, San is looking carefully at the question of export credit agencies and DFI coordination. I've been looking at the European private sector engagement in global gateways. Other colleagues are looking at global gateway in fragile countries. So it's not to enumerate all the things we do, but just to say that in some of these processes, we've seen also that the EU tends to be a bit more inward looking at their own actors, their own resources, their own capacities. But sometimes that comes at the expense of better considering perhaps actors, non-EU actors like MDBs. And I think that was a bit the point where Sally and I were a bit also worried that this could be a missed opportunity for the EU. And the paper is not saying in conclusion, if I can sum it up in one word, it's not saying that we need to work with MDBs for everything we do. The paper is saying that the EFAD, so the European Financial Architecture for Development, is great. It is a fantastic asset for the EU. But as for some specific contexts, countries, sectors, or issues, there is a rationale to work with MDBs in the sense that they complement the resources and capacities we may have, or they can just strengthen them. So, yes, I'll go back to the presentation now. So the EU is trying to be more strategic, and it needs to be more strategic as well. I think 3 dimensions are definitely put up front and where the EU has put a lot of work and emphasis on. The first one is on the dimension of partnerships. Europe is a bit alone. The US is not so much anymore of a friend or an ally. So Europe needs to make friends in order to influence as well developments in the global landscape. So that's the partnership dimension. And they're looking also beyond the so-called global north to global south countries is very important. The second element is then about resources. We are facing a lot of crises, a lot of wars in Ukraine, in Gaza, climate disasters, and so on. And there again, so the needs are increasing, the investment needs are increasing, the supply, not that much because European countries are also facing tight budget constraints. The EU needs to be more strategic in the way they spend their resources. That's what they've been doing, and the famous motto, doing more with less. And I think that trend will just go on in the next cycle, but we'll also have to make choices in terms of what we'll end up doing and what we won't do. And that also includes the first dimension on the partnership. And then the third element where the EU is putting some efforts as well is in better articulating the EU internal policy objectives and the external policy objective, especially in the context of the competitiveness agenda. So there, this is like a clear, angle and goal in the context of the next MFF. So to manage to bridge better those two dimensions, but more work is expected on the way forward. And as Hassan said, I think when we move then from Global Gateway 1.0 to 2.0, and in fact, all these strategic endeavors also from the EU, in practice, when you look at the Global Gateway, they really focus on the European private sector engagement, on the geostrategic interests of the EU. And I put on the slide a few examples of these. So there's the, of course, Global Gateway, but the investment hub recently launched at the end of last year. The questions around strategic public procurement, where there's the introduction of a new preference in public procurement. The question as well of how we can better engage export credit agencies in the European financial architecture. So these processes are very important, they're necessary, and some of them, for good reasons, are focused on EU actors. But we also felt that, exactly as we were saying with San before, that to some extent we are a bit neglecting potential partners, including MDBs, on some of these endeavors. And so an EU that is strategic is not only an EU that looks inwards, because as I said, that's necessary and that's most important for some of the processes, but also an EU that looks outward. And so that led us to work on and look at the role of MDBs in this overall architecture. And I think to do that, first we were asking the question basically why we need to rethink this collaboration with MDBs. I will not go into all of the reasons, but just mention a few of them. The first one is exactly on the EU resources that are limited. I think that there, what's important to understand is that when you work with an MDB, you leverage also the capital of that same MDB, and the capital of that MDB is not only funded by European countries, but from other countries, whether it's China, the US, the UK, and so on and so forth. The other element that I wanted to highlight is perhaps on the development of pipeline of bankable project, because that's an issue that's coming back in the fore again and again on market building, market creation. We hear a lot about this. And there again, MDBs through their local presence on the ground and their network as well, both with the public sector and the private sector, could be leveraged. And the last one is that I want to highlight is less operational, but perhaps a bit more institutional or political. The EU and especially the member states, I mean, the EU is a shareholder of EBRD, if I'm not mistaken, and member states are shareholders of several MDBs. That being said, it doesn't, like from the outside, so William, you probably know more given your past in the French Treasury, but from the outside, it sometimes looks like we're not being that strategic in the way we want to influence the priorities of those same MDBs. And I think that's even more important today, given also the US position, for example, in the World Bank, that is pushing also its own agenda. So in a way, the EU also need to be responding to these kind of challenges. So we were trying then to understand the different ways the EU can work with MDBs, and especially where MDBs can come and add value to the current structures and system we have in place. And we split basically their added value in two parts. I think the first one is about more the indirect engagement of the European private sector, while the latter part will be on the direct engagement of the European private sector. So by indirect, I mean especially through the Global Gateway 360 degrees approach, which is about supporting indirectly the European private sector. And it's the kind of things that we've been doing for a while in the EU. So whether it's about improving the business environment, providing capacity building, technical assistance, including to build pipeline of projects, contributing to the European open strategic autonomy by supporting the local private sector actors and expanding markets. There, I think it's very important because sometimes in the Brussels fora, we have the impression that when something does not involve directly the European private sector, then it's not really strategic for the EU. And this is the kind of thinking that we can hear, not from everyone and not from all the representatives, but that is out there and that we need to really nuance a lot more, because in fact, traditional development type of approach, whether it's on finance or cooperation, are still very useful. And to give you, I mean, business environment, for example, is perhaps one of the least sexy topic that I know. Yet, it's extremely important. And the European private sector especially valued this kind of endeavors. Why? Simply because they need rule-based markets. They need predictability. So it's not just because you give a grant or financial support to the European private sector that they will invest at the end of the day in partner countries. So, and maybe to emphasize that, and maybe I'm being a bit provocative, but the European private sector is not that adventurous if you compare it to other countries' private sector. So if you compare it to the Turkish private sector, to the Gulf countries, to China, and so on, so there is a real good reason as well why we should keep investing in improving the business environment. And the other element I wanted to emphasize among all of those kind of contribution from MDBs is about expanding markets by boosting infrastructure and connectivity development. Why? Because one of the reasons why also European private sector actors struggle investing in partner countries sometimes is due to the size of the market. Markets are relatively small, they can be fragmented, and so having investment that is trying to bridge some of the markets is also providing incentives for the European private sector to engage. And there, MDBs play a key role, because often we're talking about large infrastructure projects at scale, and that requires a quite large balance sheet that MDBs typically have and not necessarily bilateral institutions have. So that's perhaps one more way to find some complementarity between the different actors. And on MDB's capacities to support the EU economic interests, there we focused on several issues. I think one of them that is quite topical at the moment is on public procurement. Of course, we cannot talk about this kind of action without talking about the development of pipeline of mutually beneficial bankable projects. Mobilizing the European private capital at scale is also a key issue. And the last one is on supporting directly the European investors. I just want to pause a moment on the issue of public procurement, because I think this is definitely perhaps one of the areas that is a bit more sensitive, that is also being discussed in the next MFF, and where we need to have not, where we need to nuance a bit the discussion and the debate. So MDBs are, of course, publishing every year billions of euros worth of tenders. So it's a big market, it's predictable, it's rule-based, so it can be a good opportunity for the Europeans to engage. And that's, sorry. So yes, on public procurement, so there are strong opportunities for the European private sector, yet I think in practice, maybe Matthew, you will tell us more, but in practice, the European private sector is also complaining quite a lot on how difficult it is to access some of these. Sometimes they're not aware, but sometimes it's just in terms of the criteria and the requirements that are, or the bureaucratic process that do not make it easy for the private sector to engage at all. But I think on strategic public procurement, and here I'm talking more about the inclusion of EU preference, because this is something that we've seen in the context of Ukraine facility, the Moldova facility as well, that we're going to see as well more and more in the future. And there, I think we are very supportive of this endeavor, because at the end of the day, it's true. Like if the EU finance a Global Gateway project and it's implemented by Chinese companies, then we do have issues, because from the eyes of public citizens in partner countries, they see a Chinese company, and so they will understand that it's probably Chinese financing, not really European financing. So like the whole rhetoric is okay, and we should support this kind of endeavor. Now, I think that in practice, including a EU preference is quite tricky because that has several implications for MDBs, but also for the European private sector, by the way. But for MDBs that have as shareholders China or the US or others, it's very difficult then to implement such a requirement. And what does that mean in practice? Should we give up on the idea of having MDBs working with European financial institutions on key issues? I mean, the Ukraine facility is a good example. Ukraine is strategic for Europe, and we need to have all the firepower we can have in order to address this issue. So should we really ignore, I mean, or undermine, the collaboration with MDBs in that context? I'm not 100% sure. Likewise, if we are sure that we want to ignore MDBs in Ukraine, and maybe I'm caricaturing a bit, so, but if we are certain that we do not need them, then we are asking Richard and the EIB to take even more risk in Ukraine, to potentially, especially on large ticket size infrastructure projects I was mentioning, where MDBs are collaborating a lot. So instead of working with EBRD or World Bank, Richard will have to work with hopefully bilateral financial institutions if they can take the scale that is at stake, and that also means more transaction costs potentially. So there are plenty of serious implications and questions, I think, around the approach. And perhaps one way to think about this is to think about this less from a regulatory perspective only, but there are plenty of other ways around public procurement where you can support a better engagement of European private sector actors. So I'll close on public procurement right now, and in fact that related to the recommendations. So I'll spare you the fifth one. But as the first four, so I think that at the end of the paper, what we ended up with is that, of course, we did map instances where we see MDBs as a complementary assets to the EFAD, the European Financial Architecture for Development. Now, I think it would be even more interesting to define them a bit better and see from a European perspective, and looking at European geostrategic interests as well, where do they want that collaboration to focus on? And I think that would be perhaps a question for the Commission and for you, Federica, in that context. The second element perhaps is on enhancing the coordination between MDBs and EFAD. So far, the discussions have been taking place in silos. So we have processes to talk about the EFAD. We have another processes more at the G20 to talk about MDBs, but those two processes are a bit parallel. And there is a need not to, in general, coordinate and so on, because I think we will kill the endeavor this way. We need to be very specific and action-oriented. So we need to target really specific issues where we see that added value. So probably based on the mapping that I mentioned earlier on. The third recommendation then is more at the political level. It's about coordinating the Europe's position in MDBs to steer their operation and policies towards EU priorities. I think that there's still a margin to perhaps improve things, and we'll have to do that. And importantly, I mean, I'm talking about collaboration between EU member states, but it's also about creating coalitions of the willings. So it goes beyond the EU member states. It's the EU working as well with global South countries, with some of the G7 partners as well, on how they can influence some of the position of MDBs. And last but not least, it's also about how we can better consider perhaps strategic support modalities for MDB operations. So there, essentially what we are talking about is, we have modalities, trust funds, blending, guarantees that we can use to support them. If I'm not mistaken, also in the next regulation on the MFF, there could be a possibility for the EU to engage as shareholder of those MDBs. That's something that will probably be discussed. But there's also other questions. So it's about the kind of support that is needed, but also the type of approach. Because if I look at, the guarantees that we have, some of them from the EFSD Plus are benefiting banks like IFC, and the approach is based on the portfolio of projects. On the other hand, I'm less perhaps knowledgeable about this, but there was a memorandum of understanding between the Commission and the World Bank at the end of last year. And there, I think the idea was to co-finance or work together on a set of 18 projects or so, if I remember correctly. So we have a portfolio approach and a project-based approach. And so there again, I think probably the answer is we need both, but that's also a question to you in terms of, you know, the most relevant support we can provide those MDBs so that we can make them work better for EU policy objectives and geostrategic interests. So I'll close on this, and over to you. Okay. So yes, for this panel discussion, then we have the pleasure to have Federica Dal Bono, working at the European Commission in E5 and with extensive experience as well working for MDBs in the past, the World Bank Group. We have also William Roos, Managing Director at the EBRD, and former representative of the French Treasury, as I was saying before. We have Richard Amor, from the Director of Institutional and Partnerships at the EIB. And last but not least, we have Mathilde Maury, Director of Public Affairs in Nokia. So perhaps before we get the discussion going, I would like to collect perhaps some reactions, I think, from all of you on what you've heard and of some of your thinking perhaps around this issue of collaboration with MDBs. Maybe starting with you, Federica, if that's okay, and then we'll move to William, Richard, and Mathilde.
Well, thank you very much for the introduction, and good morning, everyone. I really want to thank ECDPM for this invitation to speak on such an important topic today, and with such a good panel. I'll just start by saying you cover a lot on your introduction, so I think I'm going to say that the summary is that the multilateral development bank are too much of an important player today on the development sphere to be ignored, and also a necessary partner for maintaining European Union interests. I couldn't agree more on this main thesis, and I want just to share some numbers. Let's start with a combined annual commitments in the past years of all multilateral development banks, including, of course, EIB and EBRD, but also World Bank Group, European International Development, IDB, African Development Bank, Asian Development Bank. They have reached record level in lending that ranges in between 250 and 300 billion of dollars per year. And this is only core lending. If we take into account the total amount mobilized by these multilateral development banks, the impact exceeds 500 billion per year on total mobilization. And the World Bank Group in itself, and having come from the World Bank Group, I am more familiar with this institution. I've been one of the largest contributors to private capital mobilization in the past, consistently for the past decade, with more of around 240 billion of private capital mobilized in between fiscal year 21 and 25. So we're really talking about large numbers. But let's consider some specific area, thematic area of where is this money going? And you cover some of them, and one is that you haven't spoken perhaps is climate finance, which remains an area of extreme interest for European governments, European institutions alike. And this has been climate finance by Multilateral Development Bank collectively, so us including the others, has been increasing 10% a year, and it reached $137 billion in 2024. Then you spoke about the less interesting area of investment regulations and business regulation, which is extremely important for European players because European companies normally are more successful and they are more productive in a more transparent and regulated environment. And in this area too, multilateral development banks have increased their financing for enabling investment environment, and they reached approximately 15 to 20 billion across all major MDBs in the past year, in 2025. Now, another strategically critical sector for a European standpoint is critical raw material. We all know we are heavily dependent on, for a green European transition, from critical raw materials, but we have Europe, as European, we have a weakness we are very much subject to supply chain risks. We need to strengthen our presence in raw materials, mining and manufacturing. And in these two, multilateral development banks have historic knowledge that can be harvested to pursue the interest of Europe. And the World Bank itself, IFC, I can mention, as 8 billion as in the past decade has invested in mining and metal. If you include also petrochemical, private capital mobilization in these sectors is about 8 billion. So it's a very large volume and historic presence in this. Now, this brings me to a second point, which you have also covered, Karim and San, which is more strategic than it appears, which is public procurement. And as you said, is a very sensitive topic. But how could European companies benefit from public procurement? Of course, MDBs have to be transparent, but something has shifted in the past year. In 2025, several NDBs have overhauled their procurement frameworks, and now they are moved away from a lowest price approach to a value for money approach. What does that mean? In the case of the World Bank, that means that the procurement reform have introduced the rated criteria. Rated criteria that emphasize three things: innovation, sustainability, and quality, which are now mandatory for all international procurement bids, and with a minimum of 50% procurement quality weighting. And even more important, 30% of the content of the cost of procurement has to be from local labor, which is, of course, extremely advantageous for European companies, which tend to work more with local laborers than other competitors in the international sphere. And this contributes, and this you make your point in the paper, so I'm just repeating here what you're saying. I'm not being very original, but this transparency contributes to a more enabling authorization and working environment, authorizing and working environment for European companies. Third point I wanted to make, and then I want to pass the word to my colleagues because I don't want to go over time. You spoke about the need for increased financing, especially we are removed the nice slides on the back at this time of conflict, at this time of increasing challenges on the global scene. It's more important than ever for any actor in development and any actor present in the global scene to be working on a collaborative approach, because European countries face fiscal and financial constraints, the same for the European institution and non-European institution. So working together is the only way to increase the financial envelopes of projects, and the solution is co-financing. As you mentioned, we have already taken significant steps in the direction of co-financing. EBRD and IEB have joined the Multilateral Development Bank co-financing platform of the World Bank. EBRD has also signed a mutual reliance agreement with IFC, and there have been other mutual reliance agreements signed between in the various multilateral development banks. So this is and in addition, of course, you spoke about the arrangement of cooperation arrangement between the European Union and the World Bank signed last year, the Global Gateway. These are steps in the right directions and hopefully sustained trend that will also set the mark for the next MFF. With this, I will pass the mic to my colleagues, and looking forward to.
Thank you very much. Can you hear me? Yes, it works. Thank you very much. You have indeed covered a lot. Perhaps what I could do is also based on what Federica said, to illustrate some of your points. So first, you mentioned the importance for the EU to leverage also the capital provided by the other shareholders of MDBs. So just to give you the example of EBRD, in our agreement establishing the bank, the EU as a whole, all the EU member state shareholders, the EIB, European Commission, they have 55% of our capital. So it means that when we invest in a Team Europe approach, approach, we use the capital of the other shareholders like the US and other. And of course, it can go on the complementary side. Sometimes there are some specific things we do, the US like a lot, and we also use the capital provided by the EU. So it works on both sides, but it's mutual benefit also between shareholders. Another element I wanted to add to illustrate that is also with the MDB governance, what is specific is that you have the countries of operation as shareholders of the MDBs. So it creates a platform where we discuss not only on the ground with the countries, of course, but also in the governance of the bank when we approve not only the country strategy, but also the overall strategy of the bank, the countries of operation, they have a say, and it creates, I think, a good spirit of cooperation. Then you mentioned the different ways for MDBs to contribute to EU interest, and just to illustrate what you said, when EBRD and many other and many times in coordination with EIB and the European DFI, when we work in Western Balkans, in Ukraine, in Moldova, of course we contribute to the EU interest through the EU accession path enlargement. You mentioned all the geopolitical diplomatic interest of the EU when we work in the Mediterranean countries, when we work in Iraq, in Central Asia, on mining critical raw material, when we work also in the developing countries to support SMEs and the creation of jobs. In a way, we contribute also to the discussion between the EU and the countries regarding the migration, demographic challenges. And of course, you mentioned the corridors. And when we finance a port in Kazakhstan, when we finance electricity connectivity in Tunisia, of course, it is linked with the EU interest. And also value added of MDBs and especially EBRDs, the local presence on the ground. So we have 1/3 of our staff in the countries of operation. And so you have a coordination, I could say, in London, in Brussels, but you have also a coordination between EBRD, the other MDBs, the EU delegation, EIB, etc., in the countries of operation. Regarding the way we work with the private companies, so you have the direct support of EU companies, so we can directly go and discuss, do a business engagement with an EU companies to support their investment in our countries of operation. So we have the example of the investment in the telecom industry in Ukraine. Xavier Niel, as investor, did one of the biggest foreign direct investment in Ukraine in the context of the war, and it was supported by EBRD and also support from donors. When we have an Italian company investing in Serbia, it was just another example. A Belgian company in Kazakhstan, on manufacturing, Carlsberg in Uzbekistan. So it's not public procurement. We go directly to and we discuss with the companies. I have mentioned EU companies, but of course we do that with the companies of our other shareholders.
So can you just, sorry for interrupting, but this is quite an important point, because quite often we hear that MDBs cannot directly engage with some companies because they have to be transparent, open procurement, and competitive. So could you explain just what is the process, and perhaps also if we have European companies listening, how, if they want to engage directly with the EBRD, what is the process? And perhaps you can take one or two examples that would allow you to engage directly.
Yes, and what I will say is not specific to EBRD, but of course you have the public procurement when you have, for example, an infrastructure, and for that, indeed, you have open, fair, transparent procurement. But complementary to that, when you have a private sector project, of course, a company can come directly to us or to another MDB or to a European DFI, like Proparco and other, and we discuss and we assess the development impact of the project. So it has to be not only a business case, I could say, but also a development impact. We look at whether we are additional. Is it really necessary for us? Because we don't want to crowding out the private financial institutions. And when we see that indeed we create something new. We can help the company attract also financing from private banks. Then we can co-invest, and they can go directly and discuss with our country team. They can go to London. We go to them. We have business engagement in all the EU capitals and the capitals of the other shareholders. So it's in a way quite easy to do. Also, when we invest and when we support local companies, many times it's a subsidiary of EU companies. It's a local company from a legal point of view, but it's a joint venture or it's a direct subsidiary of an EU company, for example. You mentioned a lot the importance of the enabling environment, the public sector policy dialogue. It's also a key feature of MDBs like EBRD. And it's on top of course, when we build an infrastructure, we help build an infrastructure, even if sometimes the constructor is not a European company. But we look at also the equipment, for example, Siemens turbine can be used in the Almaty in the Almaty project to transform a coal-fired power plant into a gas power plant. You talked a lot about standards, procurement policy. I would like to illustrate I agree with that. Illustrate a specific role. We have a legal team unit, and they are expert in helping the countries develop their public procurement, their own public-private partnership rules, and it creates a legal environment for the private companies to propose PPP project. We can work also for the mining law, and in the energy industry. If you want to have an independent power producer with the power purchase agreement, you need also an environment. The World Bank has been very active on that, and we work also on that. And finally, just to give last examples, it's the mobilization of the private capital. So to complement the capital and the loans we provide as EBRD. So we work with insurance companies, so they can buy in a way our risk, and it's a way to mobilize the capital of the private insurance companies. So we have a project like that with AXA, SCOR, Euler, COFAS, etc. So it's one way to transfer risk to insurance companies. Another way is to have co-financing with European banks. We have ILX, which in a way mobilize the fund of the pension funds in Netherlands, and they co-invest with us with a B-loan structure. And so it's just to give you the examples of also the way to mobilize the private banks and private insurance companies, and also private funds. And perhaps I will come back later to the public procurement discussion.
Yeah, no, that would be great. Richard, over to you. I guess it would be also interesting to understand, maybe from your perspective as the EIB, you can also shape the type of activities and engagement with other MDBs, so you can play a strategic role in that context. So can you maybe tell us a bit more about, how you engage with the MDBs, and where do you see that complementarity as well between, what the EIB and the FAD as well can do, and what MDBs can do?
Thank you. Good morning, everybody. Great pleasure to be here. And again, I reiterate what an excellent paper, an early Christmas present you delivered for us. And you're right, your 5 recommendations could probably generate an individual session on each of them. So you're always on point as to what's politically relevant. I mean, you've heard some of the examples, and your paper sets out some of the examples as to how we work in practice. And maybe to put it in context, is now it's about 75% of our portfolio we co-finance with one of 4 people, and actually sometimes a combination of them. So that's EBRD, that's the World Bank, that's AFD, and that's KfW. So that kind of complementarity and that working together amongst those groups is already embedded, I think, in our activity. And the paper, as you say, sets out those different examples. William, you mentioned about WBIF, you mentioned Ukraine, you mentioned some of the country platforms in Egypt, in North Macedonia. So there, we're very happy to be and continue to be working alongside all of those different MDBs in those different capacities. But I think one of the interesting elements that we've not really talked about, and I think will be the great challenges is as we're looking ahead, is what is the definition of EU geoeconomic interest? What is that? We've tried to define it last year during our own EIB global strategy process to put in place the concept of a different modality of working in different places. So this idea of an accumulating policy logic of engagement the closer we are to Europe. But it's very, very difficult, and it's certainly very, if you are somebody in Brussels, you are somebody in Berlin, you are somebody in Paris, you are somebody in Warsaw, you are somebody in Budapest, you would get very different answers as to what those EU geoeconomic and geopolitical interests are. And I do agree with you, though, it is wider than simply, with the greatest of respect to Mathilde here, it is wider than simply just support for EU companies. We need to be looking at value chains, at supply chains, at some of those more, still looking at some of those global public goods. But, and this is very clear from our member states and our shareholders, support for EU companies is at the heart of what they perceive the next 7 years, 10 years about cooperation and engagement and use of the EU budget. I think the other challenge that we're going to find when we EIB or when we're working with multilateral development banks will be a requirement for agility. I think we've seen in the last year or 18 months on changing policy priorities that something that might be flavor of the month 1 month in a year's time is not. And actually, we don't want to work in a particular country. We don't want to work in a particular sector. We have worries about a particular element of the value chain associated with that product. And this will be a huge challenge for how EU actors and here like ourselves, and I don't want to speak for the European bilaterals, but I think that they will have similar issues as to how we work with MDBs because of the shareholders that they have. And we are going to have to try and square that circle, I think, looking ahead. I think the other.
Can you just perhaps, I mean, this is very interesting points they're making in particular. I mean, EIB is working a lot on infrastructure, sovereign lending, and so on. So, which is more long term. So, how do you see? You say we have to work it out, but how do you see reconciling this notion of agility with the fact that the projects you're involved are rather long term?
I think the way that we're approaching it, and very cognizant, we have Federica on the panel as well, and I don't want to speak for the Commission, but the way that we are perceiving the next 7 or 8 years is working hand in hand from day one with our colleagues from the delegations, with the Commission, with our member states, on the creation and design of operations that respond to their policy requirements. So hopefully trying to mitigate some of those issues, but also very aware that we may need to step back in times. I mean, we've already seen it in the last 5 or 6 years with regard to our own activity. Say, for example, in Turkey, in 2019, the European Council asked the EIB to stop our activity in Turkey after the civil disturbances that took place there. So we stopped overnight. And we recognize, I think, that type of very political response and a very knowing and understanding that is our role, but how do we reconcile that it's been particularly when we're using the EU budget, how do we reconcile that with some of our obligations vis-a-vis our clients, but also vis-a-vis our MDB partners? And I think this is a challenge for us. It will be a challenge for our MDB partners as to how do we respond to those changing geopolitical requirements, including the issue here on strategic procurement. I mean, I'll maybe be brief on it, and your paper is right. What you say in your paper is correct, that if there is a maximalist interpretation of the geographical eligibility restrictions under the different EU regulations, under the different regulations, whether it's Article 20, whether it's Article 11, whether it's Article 8, in the different geographies. The effect, one possible effect of this, is that we will not be able to co-finance with MDBs. We will not. And you are right that this might mean that we will need to increase our share of lending. We will need to finance 70, 80, 100% of a project as opposed to 50% of a project. That is one consequence. I think the other consequence, and I know we have representatives from them in the audience here, is we do anticipate an increase of co-financing with our European partners, with AFD, with KfW, with CDP, and with ACED. We see that coming as well, and we're preparing for that.
Thank you very much, Richard. And it's very interesting because even when you mention, increasing the share of the investment that you'll take, so like going beyond the 50%, possibly to 80, 90%. I'm guessing that perhaps some members, at the board, like ministries of finance, may not be so happy then with the risks you would be taking through such operations. So I think this is also where there is a need to reconcile the position sometimes of the foreign affairs and the commission and those of the Ministry of Finance. And it's important to have a better engagement at the end of the day with the Ministry of Finance because those are the shareholders of MDBs. And they will be the ones that can sometimes say, yes, you can do that. No, you cannot.
And I'll be very brief, but that is also why we have to make the argument to show that there is an intrinsic and important link between the activity that we're doing outside of the EU and the policy priorities of security and competitiveness within the inside EU. And that will be the best way that we can justify those extra risks, those extra volumes, that different role that we have outside the union in those circumstances.
Yeah. Thank you very much, Shagan. And maybe I'm turning over to you, Mathilde. It's always nice to have a private sector representative in the panel, and I think that can also brings a bit of reality check sometimes on this articulation between European financial institutions, MDBs, and how you see that in practice. I mean, Nokia has been quite dynamic, collaborating with bilateral financial institutions like FinFond, but also ECAs. So it's not only development finance, it's also about trade finance and Finvera. It's also, I think you've worked as well with the EIB. You signed recently a transaction as well with the IDB. So you are going beyond Europe, way beyond. It would be interesting for, I think, us to get a perspective on, how you see the complementarity between the different financial institutions. And in which cases do you think that MDBs do add value to the financing offer or technical offer that can be put towards Nokia?
Right. Thanks a lot, Karim, San, and good morning to you all. Indeed, brilliant paper. I can only commend you for the work and the outstanding work that you're doing overall. So I'm going to try and indeed bring maybe a private sector perspective, even though I also want to put a disclaimer that we have a very specific, let's say, perspective as we're a technology provider, we're a network infrastructure provider. We are actually rarely the company who is going to be directly engaging with either EBRD or EIB, because these are our clients taking on those projects where we seek to be the vendor to. So it's here what, let's say, our approach to MDBs, to go back to your initial question, and our approach overall to any type of financing institution, is a pragmatic one. We try to engage where basically we're trying to improve the overall financing landscape available to digitization and basically to bridge the digital divide. Our vision to, let's say, collaborating with DFIs, MDBs, and overall in the developing economies is to say, okay, we still have, a third of the population that doesn't have access to internet in the world. That is the starting point. This is where we start. And then we try to figure out, depending on the projects, depending on the geography, whom does it make sense to engage with? And with which institution do we have more or less chance to get a financing, which at the end, hopefully makes us also, of course, be the network provider and not potentially our Far East competitors to a sense. So I would say, to your point, we try to be very pragmatic and we try to basically go beyond business as usual and beyond development as usual. And I think, I agree with you that we are already in Global Gateway 2.0 with trying to be going as, beyond development as usual. That was our understanding from the start. This is why we've been engaged for the past few years on this file and on this strategy, is because for us, let's say, development as usual, business as usual has already been sort of gone for many years. The competition that we face globally, but specifically in the global south, not only on price, but on other factors. We are also trying to sort of change and adapt to an environment where, our competitors are not shy from using their own national DFIs, to serve also their national interests. So we also try to, as a Finnish company, but I would say more as a European company as well, to turn back to Europe and to turn back to the European DFIs at national level, but also the MDBs, to say, okay, where does it make sense to work? And how do we adapt our understanding of their own processes? And how do we adapt our understanding of, I think it's about creating trust on the long run. It's around creating partnerships. After many years of engaging with, EIB, BRD, you could say, okay, Nukia, what is the result of that? I think a lot of it had to do with first also getting to a point of putting digitization as a priority, because digital is not your traditional sector of development. So some of the initial engagements we had with Commission and, let's say, with the Global Gateway financial institutions, a lot of them had to do with, why are you here? And we had to build that relationship of trying to understand that actually we have common interests and we have, there is added value in building that partnership. So realistically speaking, we work, let's say, more traditionally with export credit agencies because they are tied to our sales, very pragmatically. So it can be Finvera. Not only do we work with Finvera, but also the Finnish Export Credit Agency. But we also work, for example, with the Belgian Export Credit Agency because they have an understanding that the Belgian national interest goes beyond just pure manufacturing. But because we have more than 1,000 people here in Antwerp working on R&D and sort of value creation here in the Belgian economy, then this is how we can also leverage and go. And I think to the point of Richard, which indeed I think we must ask ourselves, what is national interest? Is la part française, or is it the national manufacturing? Is it a bit more of a comprehensive understanding of what is the added value and the value creation that we bring? And indeed, what is European interest? And here, I assume we will go back to the financing and to the procurement point probably more in detail. I will be a bit provocative as well to say we are not necessarily in favor of a EU preference. This is not what we are calling for. However, we are calling for a bit more understanding and a bit more strategic understanding of what are our European policies in the internal market, in the single market, what are the things that we think are relevant, and how do we also project that in our foreign policy and into the types of projects with finance, with whom do we finance those projects? And indeed, going back to the original question also of MDB procurement, we welcome the development of the new financing procurement rules of the World Bank. We are still yet to see how much of an impact and if this will facilitate or not our involvement, because I will not, I assume this is sort of Chatham House and we can be frank here, but it is indeed not straightforward to engage with MDB procurement, even though you could think, okay, you're a large company present all over the world, you must know how to do that. No, it's a work in progress. Each tender is a fight, and I think something that we need to understand is the devil lies in the detail when it comes to MDB procurement, in the sense of the amount of firepower and the amount of engagement, the amount of influence that some of our competitors, and I assume this goes well beyond the digital sector, I think I can speak for other sectors, when it comes about working on the specifications of the tender, what technology or not will be used, which will be more in favor of the incumbent vendor, which is potentially our Chinese competitors. Then when the tender comes around, of course, officially it's open, fair, transparent, and it's about sustainability. But in practice, our ability to compete is very, very limited. And this is where I think we would rather have the debate go in terms of EU preference or not. I think we would rather have the debate go into competitiveness and give us a chance to compete fairly. And if we don't manage to win, then, it's on us. But we don't think that we are, of course, in a sense, because we abide by, due diligence, sustainability rules of the EU. Of course, we do believe that our track record in that sense makes more sense for EU financiers to support. But I think it's more of a question of the ability to compete.
Could you perhaps just to be a bit more concrete? I mean, I get your point, but what does it mean now we have two MDBs here? What does it mean in practice to give us a chance to compete better? What are the kind of things that you would like to see changing? And I think it would be useful to have. Then I'll get back to you, Richard and William, on this.
Well, I think, what's been very interesting, I will actually start with talking about an MDB that is not on the panel. So our work with the Inter-American Development Bank. So the IDB, we've signed, and this is very, let's say, innovative, at least for our sector. I cannot speak for the other sectors, but we've signed a direct facility with the IDB. So it's a Nokia facility where basically it's the trade receivables facility, and this basically has an impact on some of the, they can buy some trade receivables from us, and this has an impact sometimes on the, let's say, the terms and conditions, the grace periods, so going now a bit more technical, but the kind of financing capability that we can have towards our customers, because sometimes, let's say, the backup, the financial backup that our competitors have allow them and enables them to give much more longer, terms, repayment periods, etc., which we cannot do. We are, a publicly traded company. We cannot act as a bank to all of our customers everywhere in the world. That's just financially non-viable. We can't do that. But so with the IDB, for example, that's a very, let's say, new kind of facility which enables us in Latin America, in certain markets, to basically be a bit more competitive there. So that's point number one. Then point number two.
Via helping your customers as well. I mean, it's not
all,
just for it's not for you directly, but
so
it's
a Nokia facility,
to engage
but it's
your customers.
Exactly.
I'm
so
just stressing because this is quite important. That means if your customers are in developing countries and so on, that is helping. When we talk about mutually beneficial, then this is beneficial for the partner countries.
Yeah, absolutely. And I think this is where actually we have an issue with the investment hub, even though on paper it's meant to really answer a lot of let's say our claims in the business advisory group and a lot of our pleas, e.g. to have a single point of contact. But the issue there is that for the investment hub, the project sponsor needs to be European. In digitization and digital infrastructure, usually you would see the project sponsor rather be the local partner country, the local partner company or public administration. So here, it's again, devil lies in the detail, and I think everybody here tries to be pragmatic, and I'm sure we can still work with INFA and with Global Gateway partners, but it's just to show that indeed sometimes when you come, even though you have great intentions, sometimes you turn out that for specific sectors there may need to be a balancing act. So for EIB, EBRD, for example, we must commend the work of the EBRD to come up with a policy, a public policy, as to what lies and what constitutes risks in cybersecurity. And so they have a public trusted vendor or high-risk vendor policy, which is in line with, let's say, European 5G toolbox, and specifically after the announcement yesterday of the Cybersecurity Act, probably more and more in line. And I think with the EIB, it's the same. So we never work with, with the EIB, we work directly, but for financing R&D in Europe. So that's something else. But with those institutions, we basically try to increase our partnerships, our collaboration, so that our customers in developing economies can better leverage what it is that Team Europe can basically offer.
I know Richard is very eager to react, and perhaps you can also, reacting on this, but also perhaps build on what Mathilde was saying, also perhaps on the experience that you have within the EU as well.
So really lots of interesting points. So, and I will use a different example to Nokia as to, I will use the work we do with Ericsson. So just in the interests of competition, fair competition to all. Indeed, the way that we work with Ericsson as an example is when they have won a tender around the world, we will provide a loan to the company to which they have won this tender. We've done this in half a dozen places around Africa, and that is supporting EU competitiveness, and it is also supporting the interests of those partners, those companies, those sub-sovereign entities around the world who are getting the benefit of that Ericsson European technology. So it's exactly that model is a model which is again bringing EU companies in and helping EU companies with regard to their exports. So that's really clear. I think one of the interesting points that that Mathilde touched on, and I think we should bring out a little bit on strategic procurement, is do we see, is there an understanding that strategic procurement is an alternative to hard geographical eligibility restrictions in these different guarantees? And I think that that's something that I know our legislators, our shareholders, and the European Commission, and I'm sure the Parliament, when it comes to them, are thinking about with regard to the next MFF, because that is, if I might, that is the critical question as to how we use the EU budget next time round. And so when we look at, if you try and avoid hard geographical eligibility restrictions, so the alternative is to say, okay, what sectors, what regions do European companies have some form of competitive advantage or are interested in being active? So look at that, do that analysis. And then the result of that analysis is you engage with the relevant countries on the ground to see and to help them and to partner with them with regard to building the tender processes and all of the points that Mathilde rightly said, to give the best opportunity, that fair opportunity for EU companies to then win those tenders. That's the concept of strategic procurement, right? That is the idea of still saying that these are good operations, there is benefit for your partner country, there's benefit for the EU, and you don't need the hard eligibility restrictions because you're still achieving the same result. So that's the one of the other part of the bit. And the hard geographical eligibility restrictions has all of those downsides that we were talking about with regard to MDBs. Now, ultimately, from the EIB's perspective, we can do both. We can deal with both. But I do think it's really, really important for all of the policymakers to understand the potential downsides of a hard geographical eligibility restrictions. But what I would say is, certainly from our discussions in capitals around the next MFF period, is this is the direction of travel that we're seeing from many member states' capitals as to what they want and what they are expecting that the EU budget should be used. So I think that's what I would also say on the procurement perspective. And I forgot the question you asked. Maybe I pass over and let somebody else come in.
I was asking you what are the lessons from within the EU, because of course the EIB, you also work a lot, and I mean partly also EBRD, but you also work a lot, with, I mean, a lot of your the majority of your activity, 90% of your activities are within the EU. Yeah. So then you have a lot of the clients and your customers are within the EU. So how can you draw on that when you help the EU going externally?
It's clear that there's no one size fits all. I think the other point is that many of our clients, in particular in maybe smaller or medium-sized member states, the companies in those countries need a different type of support to perhaps some of the larger multinational corporations who are much more comfortable in doing large-scale FDI around the world. So the product scope that we need to offer needs to be extremely wide. So that can be export supply chain support to strengthen the resilience of the EU supply chain. It needs to be support to trade finance platforms. It needs to support EU SMEs and EU commercial banks with regard to performance guarantees. It needs to be the full range of support in order to make sure that everybody, there is a pan-European opportunity with regard to that external action. So that's probably the main lesson learned. And part of that, and as you rightly said, is one of the lessons we have seen is we need to massively ramp up our support for the European export credit agencies. So we have to hugely support. We have to give them risk support and we have to give them liquidity support, both.
Thanks very much, Richard. And I think, we also had discussions in the previous days with other banks, and something they were telling us as well is that in terms of also market opportunities for banks to invest, if we have like 2 streets of the criteria on having European actors directly engaged in some of the transactions, that will dramatically reduce the scope of the kind of investment that they can do. And another issue related to that is that once you stop or you reduce your investment significantly in one market or in one sector, you start being out of the market soon enough, and others will come in. So I think that there's also strategic issues to be addressed, and perhaps, but we can come back to that later. What I'm listening as well is that if Nokia is struggling as well, I cannot imagine what it is for the average European private sector. Richard, you're mentioning this, having a very comprehensive and open offer is key. Maybe it would be also interesting to reflect on whether that offer is mainly targeting the mid and larger firms mostly, or even only, or can we actually do something with the smaller firms in Europe, which represents the majority of European firms. But before we go to that, and since we're talking about private sector engagement, the investment hub, Federica, do you want to come in?
I feel I needed to respond at least to the comment in defense of the investment hub, which is very new and still, I would think, a work in progress in respect to the details. As you said, Matilde, the details really matter here. And the intention, I believe, it's really not to be just inclusive, it's to be an inclusive exercise. First, because we have to consider those countries that don't have a team national in itself, and we can neglect the way to participate for a small Slovakian company or Slovenian company into projects supported by the EU. But also the idea of the Team Europe is that any company, a European company, present in the supply chain to a project, and that's normally the way Nokia engages, not as an investor, but as a provider of services and provider of equipment that could be really make the project eligible for European Union Commission support. So just a point of clarification on this, which I think it's important.
But still, if I can ask perhaps a further clarification, the notion that the Global Investment Hub is, the proposal should come from team nationals. There is a question of first, how do you ensure that, if you're waiting for proposals from team nationals, you can perhaps stimulate or encourage inclusiveness from the EU side. But how do you ensure that, there is a coverage of developing countries and it doesn't come if you need a team national proposal where you have a private sector that is a European private sector that is engaged, as Karim is saying, it's more likely to be in emerging economies that are, in markets that are already more developed, less from LDCs. And then the second question before it's also turn to William, but is how then, what is the place then for MDBs in this, or is that just one of the small dimension of Global Gateway Investment Hub, and then you have a different entry point for MDBs?
I mean, this is it's a question that I wish I really had a clear answer for, San, and I don't think that the whole picture has been drawn in its complexity inside the Commission. I'm new but I can tell you that based on my experience, before I worked in IDA, I worked in MIGA for 15 years, and I was in energy. I was a senior underwriter in energy. And there you can see that the projects originate indeed most often from local developers. And if you work in Nigeria, and one of the projects we did in Nigeria, the local developer then attracted the turbines from Siemens and then attracted investment from a number of MDBs and DFIs all together. And that's the way that infrastructure projects happen in developing countries. So an investment hub must take this reality into consideration, and it will. It's just that it's a work in progress, I would believe.
Yeah, and it's I would say even more important in the context where I think during the Global Gateway Forum of last year, we heard so much about building mutually beneficial partnerships. So having in fact the local private sector as part of this endeavor makes a lot of sense in this context. William, sorry.
No. Indeed, the discussion has been launched regarding procurement and geographical restriction. Just to give you what I have in mind and how we see that at EBRD. First, I think we all agree that we need to enlarge the definition of EU interest. At the same time, as you said, Richard, we cannot avoid the discussion about EU companies as an element of the EU interest. But then I think it's important to, even if it's quite appealing, of course, at political level to say, yes, we want to support EU companies, so we need procurement only for open only for EU companies. But first, we have heard that it's not exactly what many EU companies are asking for. And why? It's because you have a cascade effect. If we start at the EU to push for procurement open to EU companies only, you will have other partners which currently they don't do that. They will say, oh, if the EU goes toward that direction, we need also to do that ourselves. And so we will, instead of in this very difficult geopolitical context, if we of course, we don't need to be, we don't have to be naive, but at the same time, we have many partners around the world which are okay to continue to work with us with open principle. And if we send the message, then they will react, and many markets will be closed to EU companies elsewhere. So I think that it's good to separate the different things. First, we want procurement which are really fair. And for that, and we have EU references for that, we can strengthen our standards. So the idea is not to say, oh, the MDB procurement policy, they are good in principle because it's MDB procurement policy. No, we listen to our shareholders, and and to also the evolution of the EU, US, and Japanese policies, etc., in order to regularly improve our procurement policy. And so, for example, the issue of forced labor is a very relevant one, and we have tools within the procurement policy, within our standards, to deal with that, to look at forced labor not only at the level of the project, the specific products, etc., but also at the company level, at the group level, etc. So we can strengthen our procurement policy in that direction. We can also strengthen the way we assess strange price, abnormally low prices. We have the rated criteria. Also at EBRD, we have introduced rated criteria also to look at the cost through the life cycle of a product, just to be sure that we don't just look at the price of the product itself, but how it will cost during the whole life of the product. We have the cybersecurity issue, which is of course relevant. For that, we need to look at the facts, to look at that from a technical point of view. And there are some technical answers to reduce the cybersecurity risk. And indeed, we have developed at EBRD a specific team to look at that. At the same time, I recognize that cybersecurity, it's not only a technical element, and it's mentioned in the European Commission text, that there is also a political dimension, which is a bit different, and probably it's difficult to reduce to zero the political risk in some critical sector for some critical products. But for that, and it's a relevant request, but for that, probably we need to put some proportionality. It's not the same if you have the whole electricity infrastructure dependent on one provider, and if you have a small percentage dependent on one provider. So we need also to have a proportionality approach, and we need to articulate that with the industrial policy, because our bankers, when they engage with the client, they can explain, our shareholders, they don't want us to work with this high-risk vendor company. But we need to tell them what are the acceptable alternatives. So it's also very important to build other alternatives. And for some equipment, at this stage, you don't have alternatives which are with zero political cyber risk. So it's very important also to think about the sequencing of what we do, unless we are okay to stop any investment in a specific sector. And finally, regarding the geographical restriction itself. Today, we have a geographical restriction article for Ukraine and also for Western Balkan and Moldova. the message we convey is that it is very, very difficult to implement this very strict article. Of course, we can find on a case-by-case way to separate the different flows of money, etc. The case of Ukraine itself is very specific because you have a context of a war, you have allies of Ukraine, they have agreed also between US, UK, Japan, EU to indeed ask Ukraine to have a sort of negative list. Of course, we don't want a Russian company to win a tender financed by EU, so it makes a lot of sense. But where to draw the line? It's also a discussion which has to take place with Ukraine because they have also to look at that from their own interest. And what is clear is that so it's quite technical, but in the case of Ukraine, we really need what was within the Article 11, so reciprocity agreements between EU and the US, Japan, UK, etc. It's very important to be able for EBRD to bring at the board a project which has to be open to our shareholders. It's very important. And I think the conclusion should not be that because MDB have a diversified shareholding, not only an EU shareholding, then the EU should work only between EIB and the European DFI. For all the reasons you have explained, it's very important for the EU interest to continue to rely on the value added of MDB. So for some specific projects, it could make sense, and it already exists that EU member states, they work through export credit agencies when they want to be sure that the financing will be for a specific EU company. It exists, but it's very important to complement that with a large pot of money to be open also to MDBs to create these synergies between the 100% European DFI and EIB on one side and the MDBs on the other side to continue to work together.
Yes. So yeah, we'll open up the floor for discussion.
If I can steal from the public just 30 seconds. Because I really appreciated the point that William has raised and underlined that in all MDB, European countries hold an extreme amount of power. If you take, for instance, the case of IDA, about 45% of their voting power is for European countries. So there is no representation of European Union in the council, in the board. But all the European countries have 45%. Take it by comparison, US have less than 16%. So even if the US has a veto power in the decision making, de facto, also the European, when they join forces, they can really block policy decisions. So it's European can perhaps play this card more aggressively and be more coordinated and have their voice heard with all the multilateral banks, which are a necessary partner to work with.
No, thank you very much, Federica. And actually that refers as well to the question of shareholders. And perhaps it would be interesting to listen to you, William, in your past experience in the French Treasury, if that coordination between European member states is actually happening, to which extent, where can we do perhaps more on the way forward to size some of the opportunities. But I'm looking at hands that could be raised in the public. Yeah, I see one over there.
So if you can just introduce yourself and ask your question.
Thanks. I'm Megan Richards. I'm speaking in my personal capacity, though, now. I wondered if you had, from each of your respective organizations, an idea of the relative return to industry in each of the MDBs, and perhaps ECDPM has looked at this. So, for example, relative to the shareholding in that multilateral development. Sorry, my voice is going.
Thank you. Another question in the audience? Yes.
Thank you. I'm Peter Kish. I work in the DG INPA in the West Africa unit. So my question is on the financial instruments themselves. I would like to hear if either colleagues from the MDBs or from Nokia have any remarks on the adequacy of financial instruments, for example, guarantees to these strategic priorities or private sector encouragement, let's say, and whether you have any, let's say, a wish list for the next generation of guarantees, other instruments you would like to see. Like, for example, you mentioned this trade receivables facility, whether there are other ideas like this that you would like to experiment with. Thank you.
That may become a long list.
Hi, I'm Annabelle, the head of AFD office in Brussels. I have a comment and a question. The comment is first just on the methodology, the approach to the debate, just to say that, you know, with all the challenges that there are on the development, the geopolitical rivalry, I think it's important not to oppose, you know, MDBs and other institutions, in the sense that, you know, we need to use all the financial firepower that there is in Europe, and we place great value in our partnerships that with EIB and EBRD. That was highlighted as well in the debate. So it's just to say that I think we have all this financial capacity and complementarities between MDBs and national banks that also have a way, you know, to contribute to the European interest question of having a very close relationship with their national companies. And then the question is for the Commission, also linked with the previous one, on the future of EU financial instruments, linked to that, you know, that financial capacity of the different Team Europe banks. How do you see, do you intend to leverage more these institutions to advance your interest in Global Gateway? Thank you.
Thanks a lot. Of course, I mean, the first point you were making, that was the gist of why we have this panel and why we work on the paper. By the way, I should just mention also that I mean, of course, the paper, we take responsibility, but we talk to many stakeholders on you know, what were the leveragings and what was the influence. But we cannot also, we have to be also, we should also recognize that, you know, discussions among some member states and some officials and so on is to say, well, we want to have Europe and we want to work with European institutions. Primarily, some have even said only, and we talk in public procurements, this notion that we want to have strict limitations. So I think, you know, we also have to recognize that there are different views, different range of perspectives, and that's what we wanted to discuss. Who wants to address the questions first?
Perhaps, yes, on the first question regarding the return to EU industries, EU companies. What we have is first the result of the public procurement. So, as I said, a small part of what we do with EU companies. But regarding public procurement outside of the EU, it's on value term, it's around 25%. I think it's the average percentage for these last 5 years. 25% of the value goes to EU companies, and you have to look at that relative to the EU 55% of our shareholding. So the idea is not to say that it's exactly what we want, and I think that each shareholder can come to us and say, I want you to increase your business engagement with our companies, and it's fair for the EU and other to do that. So it's always important to try to have as many business engagement as possible. So, but what is very important to highlight is that first, this 25% I think is a good figure, and second, we have, as I said, not included in that figure all what we do directly with EU companies in the European countries when they invest in countries of operation, and also the subsidiaries, the joint venture of these EU companies. So from a legal point of view, it's local companies. And but it's difficult, you know, to differentiate between local companies. But if you look, local companies, they represent around 70%, something like that, of the result of our public procurement. So you have 25% for the EU and around 70% for local company in our countries of operation.
So maybe I'll comment on the instruments, and indeed Christmas is just past, but I'll make some elements on the shopping list. No, to be fair, I think this has been for us, and here I come from let's say Nokia, but specifically also from the business advisory group perspective, because I chair the digital subgroup there. This has been most of the work for the past few years as to realizing that there was a clear mismatch between the instruments, at least at European, but also at national level, between the instruments and the political ambitions that Global Gateway was trying to reach, because it was going beyond what traditional development instruments were meant to do, or what traditional trade support instruments were meant to do. So I think we've come a long way, and I think there's been quite a lot of innovation coming from the member states, coming from the Commission, coming from the DFIs and the MDBs and so EIB, BRD as well, to try and see how within the boundaries of the current MFF and within the boundaries of the existing mandates, what it is that we can do more together. So in practice, I think what is very appealing to our clients in developing economies is blended facilities. So when the Commission is able to provide a grant to basically raise the impact of grants and or guarantees, but specifically on grants, for example. So if you have a company that is going to do a network rollout anyways, then you could ask yourself, okay, why is development finance needed? But if you come in and you add bits and pieces either of guarantees and or of grants, and then you can say, okay, with that money, with that public support, we can ensure, additional capacity building on the ground, or we can ensure that we can go and connect more schools, more public institutions. So we sort of add on an ideally already planned private or public investment, and we go beyond. I think that's really this going beyond dimension, and this is where we seek and we turn back to let's say to Team Europe, is when we see those projects with potential for that. More, I think we already discussed, but bringing much more the ECAs into the question. I don't think this will solve everything. I think we need to be also very pragmatic in the sense of we cannot just completely interchange what ECAs are here to do versus what DFIs, either national ones or European ones, are here to do. And I think we need to be pragmatic in that sense. Probably we will have more impact and work with the ECAs in more like middle income countries, or let's say if you look at it, this is not necessarily in the LDCs where this is going to have the most impact, and this is where we need development finance even more. And I think indeed this whole debate as to should we have to exclude MDBs from the thinking in Europe, absolutely not. I think, but we need to be, and I think this is what we were discussing, we need to be looking at how does Europe politically influence the direction of travel of the MDBs and the way which projects and what it finances. So it's I think, and this is where we're going now, it's really ensuring that to have the whole range of instruments at our disposal, and that means from very early stage let's say feasibility studies, proof of concepts. There's a new instruments that just that was also an early Christmas present we didn't really see coming, a new instrument for feasibility studies, equity support. I think there are a few national DFIs that do that, and here I will of course raise the attention to FinFund, who was very proactive and very early on coming into with equity financing to some of our customers with innovative business models in South Africa, for example, which is now being replicated in Kenya as well. So we need to have the whole range, we need to have that flexibility, and indeed we need to have the agility to, and I will make a final point to that, to be faster at providing those projects. I think that's the point we haven't probably touched upon today, but for us is absolutely critical. Some of our customers, because it's there is no other option. Of course, they could be willing to wait for 2 years for us Europeans to figure out how to come up with the financing solutions. Others won't. And I think this is where we need to be also realistic. We need to get better not only at our instruments, but also at how we deliver them. And here it's really hard from our perspective, let's say, to tell Commission or EIB how to worked. How does it work in a project or a portfolio? I mean, for us, we're a bit agnostic as long as to the result is that we can deliver, let's say, better and faster, and indeed with to ensure that there is trust in those partnerships. That, I mean, of course, you can never predict if all of a sudden we need to pull out of a country. Well, this is what happens, but really building that trust overall, and that partnership is what at least our partners are calling for. So I hope I answer your question.
Thanks very much, Mathilde. Over to you, Richard, and perhaps if you can also reflect on some of the points that Mathilde was making on being faster, because I think there's also some tension.
I didn't take it personally. It's fine, Mathilde. It's okay. No.
There's also some tension sometimes between, having a project by project type of approach and approval validation also at the commission level, and at the same time, reaching scale and being fast, efficient. So more going towards portfolio type of approach. So if you can also reflect on some of these.
Thanks, Karim. And I'll try and not turn this into an MFF pitch, because that's all I've been doing for the last 3 months. So I will not do that. What I will say, I'll make maybe a couple of observations. One is with regard to financial instruments and the use of EU budget, everything that we're talking about is illustrating the fact that there is going to be a mix of inside EU resources and outside EU resources in order to be able to respond to the political requirements and these geopolitical strategic issues that we've been discussing. So I think combination of those two different budget lines is coming. That's point one. Point two is absolutely our view is that efficiency and simplification is needed around financial instruments and the next architecture, both with regard to guarantees, but also with regard to, as Mathilde quite rightly said, around blending and technical assistance. Both elements need to come hand in hand, and both elements need to be efficient. What our experience has also shown us in this MFF period when it comes to speed is, and this is not a pitch, but is where there are simple, dedicated windows, where there is predictability of resources, where they are put in place early, allocation and deployment rates are significantly faster and quicker than when there is a fragmented and atomized setup. So this is also our experience, and this is also our plea looking ahead with regard to whatever the framework might look like in the future. And then with my final point coming on to returns, and indeed we look at it as well, and our numbers are, for us, it's 41% is EU. We're talking now about support for sovereign operations when there are tenders for those sovereign operations, and these numbers are over the last 4 years. It's 41% EU companies, 40% local companies, of which half are subsidiaries of EU companies, 10% international, so US, China, US, Turkey, India, bit of a Freudian slip, and then 9% is China. So we're public about that. But you are right. The political push is well, should that 9% be lower, and should that 41% be higher? And that is, maybe give you the example though of where, and I think we have to give examples, tangible examples. Let's look at the middle transport corridor across Central Asia. It's a very good example of a key strategic project for the European Union. This will support our geopolitical and geoeconomic interests, because it is the way that we will receive so many critical raw materials and important elements for our supply chains. That is going to be built by Chinese companies. Let's be frank, EU companies are not going to build this. They're not interested in building it. But that is a type of example of where it may be acceptable for us that a Chinese wins that bid. And I think, so that is an example when we're talking about very tangible examples. But I think our future is being much more knowing and aware about and conscious about these trade-offs. Rather than perhaps sleepwalking into an outcome, it will be, okay, we understand the risks, we understand this might be an outcome, we accept it up front, and we are still prepared to support because we think that this is the right geopolitical outcome. And I think that that is a more likely future outcome around this topic.
Thank you very much, Isha.
I forgot to answer your point, your question about EU coordination at the board of the different MDBs. So for this answer, I'm not talking as EBRD, but more on a personal capacity. And just to first, we have an EU coordination between EU capitals. So it's done for IMF affairs through a specific group which is called SCIMF, but this group is also used for MDBs affairs. So between IMF and MDB experts in the different EU capitals, there is a specific coordination. You have also in the different MDBs, you have informal coordination between the EU member states. But you have, it's important to understand that in different MDBs, it's not rigid. You have a coordination of EU directors, informal. You have a coordination of G7 directors. You have a coordination between like-minded countries regarding climate, etc. So you have different type of coalition, and it's not rigid. It means that at the end, it's not a uniform voting pattern, but there is this coordination. And just a last example, we have, I think it's at AIIB, there is a EU, a Euro area constituency. So it's interesting also to have this example. So it means that there is a capacity for the EU member states, together with the European Commission, to be coordinated. And we see the impact in an MDB like EBRD, where the EU, when they are coordinated, they can propose standards very close to the EU legislation. I mentioned standards for procurement, but it's also for tax evasion, things like that. Also to look at the sanctions. So when the shareholders are coordinated, and when also they explain to the other groups within the shareholding that it makes sense, then it can have a very important impact. Second point is just to support the importance of simplification.
Perhaps just before, just a follow-up question, because I get your points. At the same time, when it's my personal opinion, and when I looked at the development at World Bank, for example, and the stand on climate or gender and diversity, where the US has been putting quite some pressure so that we don't talk so much about these topics anymore, I felt that Europeans were not really there in order to push back, but perhaps it's also the view of an outsider that is not part of the discussions. But I'm very curious about in theory there's this coordination and things are working definitely, but is there like ways to improve on the way forward? Do you think we do already enough and it's fine as it is, or are there margin of improvement, and what could they be?
It's more a question for EU shareholders or for the shareholders, but just to give you the example of our strategic and capital framework, so our five-year horizon document, which was approved by our board last year. So we have three main areas, three main strategies. First, one which is very consensual, it's economic governance. So you have the support of all the shareholders, and the two other, green strategy and gender and human capital strategy. As you can imagine, it was a much more difficult discussion. But the outcome is that this document, this strategic document, goes to the board, goes to at the level of the governors. The US abstain and not oppose. So, and it's because not only the EU, they have been strong in the coordination, but also they have, I think, taken time to listen and to explain to the US what can be accepted and what are the red lines from the shareholders' point of view. And I think that if I go a bit deeper, when you are a shareholder of an MDB, you have to accept that there are things you like a lot and there are things you don't like. But what is important is to have a balance of topics, projects, strategies at the board. And this is why, all in all, the US are comfortable as shareholder of EBRD because they see that we are able also to deliver on some strategic interest also for the US, but it's consistent. It's not something which opposes the US and the EU.
When it comes to European Union institutions, it's much harder to make these statements because it's the voice of the EU is the voice of all its member countries. And so it's a very delicate balance. I cannot really speak on behalf of the Commission to say whether the Commission will want to take an additional role in the board of the other multilateral banks. This is a very complex topic with no answer that is certain. But definitely this role of coordination can be played out more at the level of individual states or in a concerted effort as it happens for the EBRD. But with the US are a very strong voice, and the European Union country can only matter more if they are together. That is on a collaborative note.
Thank you very much.
There are perhaps some questions also from the people who are joining us online. So let me just summarize some of the questions they're asking. Michele de Cesais from the FAO is asking about whether you see the role of the UN as a facilitator for the business environment in partner countries, and if you have some examples, in particular from EIB, EBRD. There's also Guido van Oygten from FMO, who is asking about the cooperation between European FDIs and DFIs and MDBs. So how do you see that, and how it could be streamlined and further facilitated? And there's a question by Francesco Vinci that is asking, as MDB digital financing expand, how can risk related to digital sovereignty be more systematically addressed in project design and implementation? And a question I can see that people, I know it's just Paulus Gerhard from INPA. I just read message on the line saying that thanking us for organizing the meeting. Is there just one, perhaps one additional? We have to finish in 5 minutes. One additional question in the audience, two quickly, and then we have to wrap up.
So Michael Bosseret, so first of all, thank you for this panel and the discussion. Michael Bosseret, so I work at the Ministry of Finance of Belgium at the Treasury in charge of several MDBs. I heard several times EU geoeconomic interest, so I think it will be key to define that and to have a clear kind of understanding, at least on what does that mean. Is the EU Commission, some of EU member states, and then let's see if we have a EU common understanding and common position, how do we translate that into action? And here is the question of governance in MDBs. I mean, I would say there is the usual suspect EIB, EBRD, majority of EU shareholders in the bank, but in other MDBs we are in a minority. So how do we make sure that our geoeconomic interests are translated into action where we are in a minority in an institution? Inter-American Development Bank, Asian Development Bank, and obviously we have informal coordination, and the schemes you mentioned, but a way forward to be even more coordinated through formal mechanism, because the informal exchange could lead to a different flow of information and so on. So it's also a question I have myself in my work with other colleagues, but to move to the next step in terms of more coordination, and then the issue of different member states, ministries involved in MDBs, and we are a member of different constituencies, not always EU countries. So there is a lot of practical issues that would lead to difficulties in coordinating position. Thank you.
Thank you. I'm not sure that was necessarily a question, especially coming from from an official from Belgium. That is probably your role also as member states. As you said, and this Friday we are at the council talking about Global Gateway, and that's That's probably a point that we will raise in the council, that there's a role for member states to define what is the EU interest and what is the EU strategic. That's something we can bring up together on Friday. Last question.
Yes. Thank you for the presentations. My question is to the whole panel. I would like to know, how can you make sure that some markets won't attract all the investment because they are well regulated and because the governance is well structured? So how do you ensure that there is a certain balance between regions in terms of investment? Thank you.
So we started a bit late. We can have an additional 5 minutes, but let's try to stick to the time. I think everybody's busy. So short answer from the panel to these many questions. Pick the one that you like.
Okay, 2 responses. One is UN agencies, absolutely critical. We have lots of cooperation. 2 examples, working with UNDP in Ukraine, working with UNICEF and WHO on polio eradication throughout Southeast Asia alongside the Gates Foundation. So 2 examples. On EU interest, very quick response. We've put something in black and white, right, in our new in the EIB global strategy. So we have put something in there, our view on what the policy priorities are in different geographical regions. It's there. It's what we think. It's following our discussions. It's been validated by our board. It's a starting point. I think it will need to evolve. And we are also now looking about, how do we assess this? How do we appraise it? How do we report on it? How do we measure on it for the purposes of our own governance arrangements? And just final point, just on governance, the European Commission sits on our board. European Commission approves every single operation that we agree to. Every single one.
Who wants to? Mathilde? Oh, sorry.
No, maybe on digital sovereignty, I'm not quite sure exactly where the direction was going, but at least what we see from the different governments in developing economies that we also work with, that we try to partner with in terms of digitalization. Indeed, digital sovereignty, the questions that we are having here in Europe, they're having the exact same question. How do they ensure forms of sovereignty in digitization with the boom in the data center development and so on, and how do we think about the sovereignty of our data, the interoperability of our data? This is where we believe as Europeans we have much more value to bring to the table than potentially other entities around the world. So this is where I would also, because of how do we look at data here in Europe and how we regulate also, and so in that regard, I don't know exactly if this was the question, but this would be our plea to say that if we work as in the EU Tech Business Offer, for example, so if this is how we promote also what Europe can be about and what Europe can do, then I think this is the right way to go. On the collaboration between DFI and MDBs, coming from Guido, I think this is absolutely critical. We see that already quite some bits. So from us, from an external perspective, the more the better. And I think the better risk sharing across institutions means that probably then they have also more capacity to then be able, and to go back to the last question, to then be able to take more risk also in potentially more risky geographies, because I think this is where also the questions of then local currency financing, and I mean we haven't really touched upon that today, but this is also where we see potentially also a real need for better risk sharing, because obviously the credit risks and so on, these very much depend per country. So being able to take more risk to then also get to a better balance of investments, but I think so. I won't comment on how they look at it, but from our perspective, better risk sharing as Europeans and overall between Europeans and MDBs is absolutely crucial.
Yeah, thanks, William. You can address that since you cooperate a lot with DFIs, including FMO.
Yes, just quickly to echo what Richard said regarding UN, we have also a very efficient work with the UNDP in different regions, and also in Western Balkan. And just to give another example, cooperation with European DFI, of course. So it's first to facilitate the co-financing. So you can work on mutual reliance agreement regarding environmental and social standards, and in order to facilitate and to increase the pace of the finalizing the project for the country of operation. So, and you mentioned local currency financing. It's EBRD made a proposal last year to work on creating a liquidity pool in local currency based on the local financial market, so onshore hedging, not offshore. And the idea is indeed to use the expertise we have developed and to think about how to build something which could be available for DFIs which cannot have a treasury activity in all countries of operation. Regarding the governance
you're just very innovative. Yeah. If you could also, responding related to that, also your cooperation with ILX, you mentioned that very briefly at the beginning. It's perhaps worth saying in 30 seconds what you're doing.
It's part of our private capital mobilization agenda. So it's like over MDBs, but it's to have sort of you can work, to mobilize private capital. You can work on a project by project basis. Yes, it's the usual way. You do ex post. You have a project. You try to find a co-financer after the project is originated. But you can also look at that from more synthetic approach. So sharing ex post the portfolio of project you have, and to engage with ILX and other financial investors to understand their risk appetite, the type of geography they want to invest in, and then to build with them a specific portfolio risk transfer or co-financing with ILX. And it's an important part. And at EBRD, and I think it's the same in other MDBs, we don't look only at our total investment figure, direct investment figure through our own balance sheet, but more and more at the total mobilization we do, and it represents I think 25 billion for EBRD last year. Last point on the governance of MDBs, the question by Belgium. In a way, the principle of the multilateral institution is that usually you are in a minority position. It's the exception in a way, EBRD. And so for that, you need to build coalition internally with the other the directors, and it works. It works well. And then you talked about, do we need a more formal coordination? It's not for EBRD to give you some advice, but what I've noticed in the past is that when there is a specific topic which is highly political and which is discussed in different MDBs, sometimes you have a ECOFIN conclusion or things like that, which can help the coordination in a more formal manner.
Thanks, Federica.
This is
words for you.
This is really just in response to Belgium, and it's more in my capacity as a former World Bank. I remember that I was experiencing a lot of coordination from European countries. Every time that the Council of Europe chair, a country chairs the Council of Europe, then they also express they coordinate on behalf of the others. And therefore, this has been very effective and very cohesive. And it's very important to have a strong voice from European countries. So I don't think this trend, I think this trend is there to last.
Great, thanks a lot. We have not exhausted the topic, but I think thanks to your insights, we are much richer now. I also would like to stress perhaps the points that we have not explicitly addressed, but MDBs and public development banks are also there are some quite innovative approaches, and so also in terms of the tools, I mean, we mentioned some of them and some of the instruments and way of engaging. It's also a very useful way to also leverage I would say the innovative capacity of different MDBs and the way they engage. And we could not have all the MDBs that we talked to on the panel, but there are also many other MDBs that are super helpful and super innovative as well. So we would just like to encourage these kind of approaches, especially in these tumultuous worlds. Thank you very much to all of you. Let's be in touch, and thank you to our panelists, and thanks, Karim.